Welcome to the Dividend Talk podcast, episode 103. Our thoughts about investing in the 11 different sectors. Hey guys, welcome back to another episode of Dividend Talk. Today, myself and European DJI will talk about our thoughts about investing in the 11 different sectors. We'll talk a little bit about Altria, all that and more. See you on the inside. Hey, European DJ, how are you doing, buddy?
I'm doing really well. I mean, I must confess, I'm extremely busy at work at the moment, but only good stuff. But damn, the stock market is so nice at the moment, right? It's really like a dividend investor's dream. I mean, all these stocks today, Nighthawk, one of our buddies on Twitter, mentioned like paralysis analysis or analysis paralysis, right? Like it just becomes hard to choose what to invest in because I mean the cash you can only spend it once, and there are easily 5 6 stocks that I could pour money in today, right? Compared to last year. So from one side it's really awesome, but yeah, it makes me wonder again that this weekend I really need to start compiling my watch list again because today I don't know what to put the money in. Actually, it's just too much choice. I don't know if you have the same, but for me, it gives me this really awkward feeling of excitement, but also a bit starts to annoy me from that point of view.
Do you know what? I feel a little bit differently than I did back in March. In March, I felt I needed to get in. I
Hmm.
thought I didn't think, I thought it was a crash, like a
Yeah.
flash crash, right? And that's what I felt at the time. Now I'm not in so much as a rush. I don't think it's a crash. I think that we are genuinely in a bear market. We don't know how long they last,
Hmm.
but if we look at all the trend lines and the moving averages, they're all trending down at the moment. So I don't think I'm in too much of a rush. There'll always be companies that I'll miss out on because of that, but there's so much. I mean, we're going to touch on some of these today. We have T. Rowe Price coming near $100. We have Siemens coming near €100 or under €100. Intel looks like it's going to plunge towards $30. There's so much choice out there, and the hard part is picking the best one, isn't it? And there's so
Yeah.
many companies you want, and then you see them all on sale. It's like when a kid goes into a candy store and everything is on sale. What do you buy?
Yeah, exactly. But then, I always, in the old days, before the euro, it was a gulden. I got like a gulden, it was called, for buying candies. And I remember that in the store, they were often annoyed because then you said, okay, this one for 5 cents, that one for 5 cents.
Yeah,
And then you were really thinking, and you had these little frog candies, they were 5 cents, and then bananas, 5 cents. But then, for instance, if you would take such a kind of a big lemon was then 10 cents, right? And then you really need to think
yeah.
like, okay, do I want this? And before you knew it, you had your guild. And this is how it feels as well. But I'm not buying here like 20 euros here or 30 because we use different volumes, right? But it's exactly the same feeling. The broker is just not annoyed because everything is automated.
Yeah. I'm trying to. I remember we did a show. I can't remember what episode, what we would do if the market crashed or fell, and
Yeah,
we talked about what we did. And I think the key thing I was saying at the time was I want to focus on quality, and
yeah,
that's what I really want to try and stick to because there's so many companies out there
yeah,
that look cheap now and look a lot cheaper,
yeah,
like Walgreens, for example. Walgreens are not an A grade company, and
yeah,
it's probably easy to look at them now and think, "Ooh, they're in deep value territory," when in fact Johnson & Johnson's probably in value territory as well. So I'm trying to
yeah.
force myself to stick to those companies. I don't know if you can see behind me. I have a
Hmm.
whiteboard and I have a list of all the prices and targets that I want to reach, and I'm tracking them. But I mean,
Yeah,
I
but Bus F, 8.2% yield at the moment.
I forgot I had a put option on BASF, so I now own 100 shares of BASF as of last week. So
Wow.
I think I'll be taking advantage. I think I got him at about 7.9% yield, I think. But
Yeah,
hey,
look at that. I mean, Their dividend is safe, in my opinion.
Yeah, I think so.
So it might not be a fast-growing dividend, but this is what we know with BASF, right? You need to buy them at the bottom of a cycle, and it's still in crashing. So who knows? Maybe it touches even 10%.
If it goes to 10%, I probably will buy some more. I won't
Yeah.
lie, or at least start selling puts again on it.
Yeah, so I own some because I did this. How was it called? This I wanted to do the wheel strategy on BASF. Yeah, or the dividend capture I did. So I took all the dividends in May, but the stock price didn't come back. So I kept those 100 shares. And I'm totally fine with it, right? Because it's a quality company. And yeah, it's just, I mean, there you go. But is it a high quality company like my anchor portfolio? No.
Mm.
Yeah. But it's choices, choices, choices.
You talk about dividend capture, and you remember back when ZIM, the the
Yes.
freight, and they were, I think, there was 17.50 dividend.
Yeah.
So this last quarter, this quarter just gone, they had a dividend again of $2.50. It was still a
Yeah.
decent yield. I can't remember what the yield was off the top of my head. So I tried it again, okay, and I sold a cover call, and I bought 100 shares,
Mhm.
sold a cover call. I managed to get the dividend. The price bounced back. I should have sold. The cover call was not assigned, so I kept all the premium.
Mhm.
At that point, I had the full dividend, I had my money back, and I had a cover call, right? I should have took the money.
Yeah.
What did I do?
You kept.
I kept and sold another cover call, and the price is now after tanking. So now I'm stuck with it. I got greedy, and I deviated from my plan. And do you know what? I have no
Yeah,
problem
because
admitting it.
you're doing this on stocks you don't necessarily want to own for the long term. So for me, that
Yeah,
I have BASF in my portfolio, I just have a really low cost basis because of the dividend capture and then the covered call selling, right?
yeah.
So
I mean, I was out of it with about $450 profit.
yeah,
So I should have just took the money and ran. I decided to do another cover call, which gave me an extra $250,
yeah.
and it was meant to expire last Friday. And I think the price dropped literally the day before, just went vroom. So I got caught being greedy, which I'm not
Yeah,
ashamed to say I got caught, and now I'm stuck with it for a while. But hey, that's one of the learnings, isn't it? It's
exactly.
sometimes you need to stick to your plan, and sometimes you get greedy, and that was just me this time.
Nice. Hey, talking about greedy and high yields. I mean, hallelujah, what happened there with Altria this week in the news?
Oh boy, I mean, I don't think I wasn't expecting it, particularly after British American Tobacco had a similar. I mean, I think they all had to give a risk report or something to the FDA about how these, what do they call them, these vapes, how they're going to provide a net benefit to the public. So basically taking people off smoking is what they're supposed to do. I don't know if all three were late or if they handed it in and it just wasn't good enough, but British American Tobacco got approved. I think everybody was kind of expecting this to go the same way. It didn't, and their share price tanked because of it. It's a bit of a shock to me, to be honest. They're kind of relying on that part of it in international markets now. I'm not sure how they're going to navigate this in the US market, but
Yeah.
it's not a good sign, is it? It's really not. And is it bad management? No,
Yeah,
it's
we
look.
had a lot of conversation about that on the chat in the Dividend Day group, and I think there are two schools of thought. There are the ones that own Altria, and they feel like, okay, it was the right thing to buy or invest in Juul at the time, and I think so. It was the right time. Or no, it was important to do something with these new kinds of smoking, how is it, trends.
Yeah,
So they had to do something. I just feel like I said in hindsight, it's really easy to judge, right? To be honest, but for me, this sounds a little bit like Monsanto because it's just this Juul is just one big drama, and it just doesn't seem to stop this drama. Yeah, so they made an investment; they can write it off totally almost. So, I mean, we can say like, well, management had to do something. That's true, but this sounds more like opportunistic management that wanted to reach the headlines, but not necessarily that proper due diligence and such. And that's why I feel British American Tobacco is much better managed at the moment than Altria and much better positioned. Of course, I think Altria yield is quite safe from that point of view. Also, if you look at I said the dividend safety profile and the the debt profile and such, but the dividend safety is not anymore as 1 week ago. So it's definitely had an impact there. And I think you need to now really closely monitor because the company cannot afford anymore these kinds of missteps. It also couldn't remerge with Philip Morris at the time, right? So everything management tries to do seems to fail. And they really need to start looking into their own, or maybe do some deep soul seeking, like why this is happening to them.
Yeah.
What are they doing wrong here?
I mean, what's the fundamental difference between British American tobaccos? I think Vuse, I think they call it.
Yeah.
What's the difference between that and Juul? Why did one get it right and one get it wrong?
Yeah.
They're competing in the same markets. It's not a surprise. So you'd have to question management on this one. There's obviously
Yeah.
something fundamentally wrong with how they went about this.
Yeah.
I've no doubt that they'll appeal this and maybe it might get overturned. We
Yeah.
don't know, but it's certainly concerning for me. And like you, is the dividend in trouble? I would say not yet, but we still have to fully assess the impact of this.
Yeah.
How's the company handle this and see where they go. We know
Yeah.
they're in a declining market, so they will be under pressure to pivot at some point and buy into something else and try
Yeah.
and raise cash somewhere. But I'm not too impressed at the moment, to be fair.
No, me neither. And then let's talk about the next drama here because Bayer, the Supreme Court decided and rejected to take their appeal into consideration. So what's the story? They wanted to go to the Supreme Court, right? They wanted to, I think, get something undone that was in the lower courts, where a 25 million ruling was awarded to a person in California. Uh, Supreme Court say, and you have the jury system here, right? This whole way. So I think there's a lot of subjectivity here and such. So they went generally in the system, right? So they went to Supreme Court. They wanted to have a reevaluation because the what is the how is this called? This group that studies the impact of glyphosate. I forgot. Anyway, the regulatory agency said like it's in general okay, yeah, to use it. So there's this kind of clash, and can you trust on the government's rulings and not? But yeah, the Supreme Court, they can only take one or few cases here, right? If there are thousands of cases coming their way. And they just said, we are not going to take it into consideration. So what it means for Bayer now, they had a whole plan to get out of this shitty situation. And this summer ruling was key to this whole plan, yeah, as their way out. So for me, the CEO can now start packing his bag. It's his plan failed, gone. In my opinion, there's no reason anymore to keep him anymore. We were complaining like it takes too long with his reaction and naivety. He came with a plan. He put everything almost on the Supreme Court ruling. It failed. He needs to be gone. I trust is gone now. Too many failures, and I know he put his fate on the Supreme Court. It's his judgment call. It might sound really tough, but I don't have mercy for people that make mistake over mistake over mistake over mistake, get such a large paycheck to run such a company with so many employees that have all families and putting it on the line as well, because it usually results to cost cutting in other business lines and such. And if they get a really high reward for their performance, then we should also be really criticizing this, because this is for me amateur here, not because we're talking about captains of industry. They are selected out of 50 or 100,000 employees to be the best of the best of the best. Yeah, he clearly isn't. So in my opinion, he should be out now. he has been really destroying shareholder value. So
I mean, when are they going to learn from Johnson and Johnson? Just spin off this business, get rid of it. Just
yeah,
they
I think so.
they don't need it. I mean,
Yeah,
just get
it's
rid of it.
maybe it's also European culture, right? In America, if you look at now how they are just hiking rates to fight inflation, also in 2007, 2008, how quickly they intervened and also let some companies go bankrupt. In Europe, I think we need to have meeting over meeting over meeting over this and trying. We don't have really a culture of appreciating even failure, right? Why don't they just say, okay, you know what? We do a kitchen sink quarter, spin it off, we swallow this tough pill, and we reset ourselves. American companies and American economy is really really good in that, yeah, effectively. They have a purer form of capitalism, in my opinion.
Yeah, it's completely different over there than here, and I don't think the management are able to comprehend that, and they're trying to probably push it like they would push it over in Europe. It might fly over here, but certainly
Yeah,
not
but you
over
have
there.
now a manager that needs to clean up his own mistakes.
Yeah, I think
Yeah,
it's
because he got in place around the time of the Monsanto deal, and he was really working on this Monsanto deal. So it's kind of his baby. Yeah. So how can you expect from such a person? It was the same with the CEO of Danone at the time. Yeah, he had also a lot of bias because all the strategy came from it. It was just not working anymore. At a certain moment, the board of directors needs to intervene, and they just need to kick the person out.
yeah. I think he's going to come under severe pressure. I can see the share price going to drop heavily after this. Just looking at the volume over the last couple of days since the announcement, it's quite high, quite bearish as well. So it'll be interesting to see if is this one of the companies part of Ray Dalio's Big Short, I wonder.
I believe he had also some in there, but I'm not 100% sure.
Yeah, I mean, maybe he knows, but I could see this company dropping a bit, and if it does, the CEO will definitely be under pressure. I'm just looking at the amount that they have provisioned for litigation, and it's up around 16 billion. They paid 63 billion for the company. I mean, it's 25%
Yeah.
almost in litigation.
Bayer is on the list. I quickly checked it. It's on the list as well.
It's not a company I'm going to rush to buy. Let's put it that way.
No, I still own some.
Okay, we're going to talk a little bit about sectors and how we maybe invest in all the different sectors. Something we haven't really spoke about before, so might be interesting. So, I mean, just to be clear, we're going to talk about the 11 different sectors. I know there's two different types that you can talk about. We're going to talk about the 11. I think it's GISC sectors. I think if I remember. So let's have a little chat about them. So I'm looking. I'm curious to know, right, off the top of your head, what do you think is the best performing sector over the last 10 years?
I honestly am really clueless about it, but if it's the last 10 years, I think information technology. That at least if you look at the FANG stocks, right?
Yeah, that would be correct. Yeah, I kind of guess you would get that. But what would be the second then? That might be a little bit trickier.
I think healthcare.
Yeah, bang on. Okay, one more, last one. What's the worst? This is over the last 10
Yeah,
years, remember?
the last, I think energy.
Wow. It's pretty good. It's pretty good, Joe.
Yeah, that's good.
You're bang
Okay.
on the money. Yeah.
Yeah.
It's interesting, yeah, that I mean energy. I I would have thought utilities maybe would have been
Mhm.
there. Maybe communication services would have had energy a little bit higher. But then you forget
Yeah.
2018 we had
Yeah,
issues.
2016, the oil glut as well. That was when ExxonMobil was at 100, 2014, 2015, yeah. And the 3% yield. And it hasn't recovered since then, while all the other sectors have been growing. Yeah, so, this is really interesting, right? And if you think about information technology and healthcare kind of makes sense, right? If you hear that specifically in America, people are complaining about increased healthcare costs way above inflation, drug prices as such, it makes sense. IT, information technology, I think it's kind of it became mainstream, right? If you look at this, I mean, Facebook, Apple, Microsoft, they really became juggernauts compared to 10 years ago. So it all makes sense, right? And the question then is naturally like, what will be the best performing sectors over the next 10 years? And this is really interesting. And why this is so interesting for me to think about, we just spoke about Ray Dalio, and they speak a lot about the end of the big debt cycle that we are in, right? This 40-year period where we need to do a giant reset. So there are many people that have these stories like we're going to enter a winter. And also, if you look at the historical S&P 500, there have been many times that share prices were flat for a decade.
Yeah.
And this is, for instance, the case if you look at after the 2000s, right? Didn't it, I don't remember, I'm saying this all top of mind, but didn't it take 14 years to get back to where it was around 2000? And
Yeah,
that would have been effectively meant that money since then.
they call it the lost decade, don't they? And I think
Yeah, yeah,
there's a lot of fear at the moment around that, because historically, I think Japan had something similar. I don't even know if Japan
yeah.
has fully recovered from it. Historically, it has happened, and it could happen again, which a lot of people are starting to speak about. And as you
Yeah.
mentioned, Ray Dalio is one of the biggest ones saying that it'll be even worse. It might not be a
Yeah.
lost decade. It could be lost forever if you were to listen to Ray sometimes.
So having said that, now I have planted the seed in your mind. What will be the top three performing sectors in your opinion?
It's it's really hard to look past information technology. I mean, we live in a digital age at the moment. Everything we do is online, and that's only going to get bigger and better. So I still think the top two will be information technology and healthcare. There's lots of advancements in healthcare, and particularly information technology. We have these biotech. There's going to be a crossover, isn't there? Like, so I
Hmm.
think I think they will be the top two sectors in the next 10 years. The third one is probably a little bit more difficult. Most of them are cyclical,
Hmm.
and so it just depends on which cycle we we come out of on top. If I was to hazard a guess, I don't know. Maybe financials might come back into the fore. I know they've taken a real beating sometimes, particularly after the last crash, but
Yeah.
maybe they might come back around.
Yeah, I think similar about information technology. It is also where all the investments are at the moment. There's so much innovation going on there.
Yeah,
That's flywheel is unstoppable at the moment. It's really unstoppable, and I'm not so bullish as many others are. Like let's say on AI, because I work a lot with such stuff, and I think it's overhyped typically. Specifically, if you look at the level of advancement that people are thinking about,
yeah.
because most of the times these are still like algorithms and statistics. Yeah.
I,
So but I think we need some more technological breakthrough in that industry, more computing power. So if we make some strides in quantum computing, then AI will really boost really quickly. That's my expectations. So
so I know you work around AI, and so do I as well. But do you think, I don't know what it's like in your company, but it seems to be a buzzword, particularly with the higher ups, people in the board.
yeah, because I mean, open up Harvard Business Review and it's everywhere. And I think the simple AI, definitely, it's already being applied. I think if you also look at Google, it has so much data and actually quite structured data. But for instance, I read Novartis, the CEO at the time, right? They were heavily bullish on AI and advancing medicines and such. And then after 2 3 years, I saw an interview where he reflected like, yeah, well, it's really nice, but our processes and our employees, they don't capture data properly, so we can't do anything really here if we don't have the data in the databases. And this is what most companies really quickly hit. And then you go into some people call it AI, but you go into robotic process automation, you go into chatbots, but what you're really just doing is I call this IT duct tape. Yeah, and that's what you're kind of stitching your company together with, and you save a lot of costs, what admins are doing and assistants are doing and
Yeah.
everything. um but you need really good data, clean data to make academic judgments, and this is often what AI is about, right? If you want to use it for digital insights, decision making support, and such. So
Yeah. Yeah. It's funny you mention good data because in automation, I work a lot with vision systems, and I think AI is perfect for vision systems, particularly something that's repetitive and it's defined. This is good. This is bad.
and you have sensors that capture
Yeah,
the data for you, and you don't need humans to capture it for you.
exactly. But in saying that, you need to train that model, and to train that model, you have to give it good data. And we're using our older vision systems to capture images to give to the to give no to run a trial. And now when we look back, actually, so many images we're capturing, it's not good data. So it has to be good for AI to work efficiently. And that's simple with a vision system where it's black and white, where it's
Yeah.
either passed or failed. I could only imagine how complicated it would get in other areas. But I mean, it is certainly for me, it's definitely a buzzword. I mean, when I was presenting my project, the board were looking at me saying, no. And then I mentioned AI, and all of a sudden it was a game changer. And I mean, we're doing nothing different, only, only,
And
only,
that's what I mean.
you
And
know, so it's
and
crazy.
it's unstoppable. In my opinion, we'll get there, but we need some more technological breakthroughs here to really, really start uncovering it. But we also, I think the issue is also that we probably work in companies that are not technology driven from its foundation.
Hmm.
Yeah. And so you have a lot of people that are not used to work in a company where that it is digital business, right? Where everyone understands the value of capturing data and such. So for such companies, it's really really hard to really benefit from AI. But I do believe we'll get there, but not so quick as people wish they will get there. And that's why I think we will also see some companies really contracting again in share prices and everything, like those startups. And we've seen that already over the last 2 years that they were not making it, right?
And we talk about data and the amount of data that is needed. What about companies that store this data? I mean, I don't know about
Yeah,
you
and
guys.
that's why I'm much more bullish on digital realty income, sorry,
Exactly.
the trust, because they are building data centers and such. So those are the areas. So, but if we are now really long talking about this part, but it just shows how much money still needs to go into IT. So this is just a sector that I can't imagine any other sector to be number one in 10 years from now. Really
Yeah.
not.
Healthcare
Yeah.
could push it close. I mean,
I think healthcare could get there, but they depend a lot on AI.
yes.
Yeah, they depend on the IT sector to get there, I think. And I really think we will see disruption in healthcare. Um, I, Google, Amazon, these companies, Apple, I think they're really looking at healthcare and think, like, how can we crack these nuts here? Because there's really lots of money to be made. So healthcare for me is also number two. And then the third one, I think I will go for energy. And the reason why I go for energy, I think what we are seeing now is, we've been talking about insourcing again, the move from outsourcing work overseas, insourcing geopolitically. I'm not so optimistic about the world where we are. We are also talking about sustainable energy. So I think we will really come into a decade where energy is so scarce that we will really have to pay up a high price for it. The issue I have is like what we see now also in America, what we see in Europe, that they want to tax energy harder with their profits and such. So there's too much regulation in this space because everyone feels it directly in the inflation. So let's assume that government wouldn't be so controlling. In that case, I would definitely think that energy will end really high up, with that caveat to it.
Yeah, I mean, 10 years is a long time, and we know what, particularly Europe, are trying to pivot away from certain energy classes and more into electrification. So I'm not quite sure it's going to be the third biggest,
Yeah, but
but
you need to look. I look at the value of energy today.
yeah,
Yeah, which the oil companies are really priced low generally because of the ESG concerns, all this kinds of stuff, right? So, but there will come up new companies in the energy sector that are more, maybe even a better fit for this.
yeah, yeah, it'll be interesting. There's a there's a lot there, but I do agree with you that I think we will have an energy crisis, which could potentially drive up the prices. But I mean, an energy crisis will affect a hell of a lot of people.
Yeah,
Governments will be under a lot of pressure to keep them down and sustainable. So
yeah,
it'll be challenging times, particularly in Europe, the landscape of Europe, that we depend so much on outside of
yeah.
Europe for some of our energy, which is crazy when you think about it.
Mm.
But uh,
What do you
yeah,
think about the worst performing sector of the next 10 years?
could be real estate maybe or utilities. I mean,
I
the
also think real estate. I
yeah.
think if we go into a high interest environment, I think we will see lots of price compression on real estate investment trusts.
I mean, you have to think if rents go up, then they're going to struggle, particularly corporate rents, not just even your
Yeah,
own
yeah,
houses, but corporate
yeah,
rents. And
yeah,
we know from the pandemic that people can work from home. It has worked.
yeah, yeah,
So now we have the model for it. If prices go up too much, we might
yeah,
see that transition happen.
yeah. Yeah, I think similar. It might. I think such sectors will make this. I think a lost decade. Here, yeah. It's really interesting to. We're probably totally wrong, but it's interesting to speculate on this here.
And it's funny because we spoke about the sectors that I'm probably the most comfortable with. And then we have the likes of materials, industrials. Um, I don't have a lot of those companies. I've spoke a lot about Siemens and 3M in terms of industrials, but outside of that, I don't really have a huge grasp or huge knowledge of that sector.
Yeah, I mean, I've studied quite some industrials, but they are just not for me good dividend pay because of the cyclical nature. You see a lot of dividend cuts, so you need to be really having those companies that are industry leaders, good balance sheets that know how to survive a cycle, and have done this probably multiple times in history, and are loyal to the dividend and know that dividend is an important item of their total return for their shareholders. That's why Siemens and 3M stand out here, I would say. Um, yeah, yeah. And then the same with materials. It's also a bit of boom and bust. I have both Rio Tinto and BHP in my portfolio, but I don't have them as dividend growers. I have them as high yield dividends, and I expect them to be cut from time to time. But I know there's kind of a floor in the yield, and I only allow this for a really small part of my portfolio because, like I often mention, in a crisis, I don't want to suddenly get dividend cuts and therefore have nothing to eat. Yeah, so but I allow this because it helps me now with the snowball a little bit in these early years. But in the end, this will be probably like in dividend income, maybe 2% of my dividend income at time of when I'm going to live off dividends. Yeah, it's now just more. It's maybe now 5 or 6%.
Yeah, yeah. And what about communication services then? Where do they fit in?
Well, not in my portfolio because I don't own them. I had some AT&T for half a year, and I got quickly rid of them again. I mean, for me, communication. I mean, what are we talking here about? Really, about in Europe, KPN and Orange and such companies. I mean, for me, there's nothing in there. I don't see a lot of innovation. Okay, we go to 5G. Damn it, governments are the main winners from 5G, not the telecom providers. And people that build business models on it, like Google, yeah, they can give better YouTube streaming to their consumers, right? That's where the innovation will happen. So for me, it is totally not attractive because they need to carry the whole cost of investment. But I don't see them as the beneficiary of all this what 5G offers. So
Yeah.
for me, it's a sector I don't invest in. It's actually the only sector that I don't invest in.
So I still have AT&T, but there was one company that I kind of came across over the last week or two by accident actually, and the ticker symbol is CCOI, Cogent Communication Holdings. And unlike your AT&T and so on, these offer a much more niche market. So they give internet services over fiber optic. Most of their customers are corporate customers, so they can guarantee speeds.
Hmm.
You get it direct from their box straight down. So it's quite interesting company. They have a high yield, really 6% dividend yield, and it's a grower as well. It's a dividend grower.
Hmm.
So the only issue with them is they have a high PE ratio for the last 10 years. I mean, they've been over 60,
Hmm.
60p ratio for the last 10 years. So they're quite expensive. But in terms of a company, I'd much prefer them over AT&T
Yeah, I can
because
imagine.
because it's vital. So that they target a specific niche. Okay, they want corporate
Yeah,
customers. And what the corporate customers want, they want guaranteed uptime, they want fast speeds, they
yeah,
don't want to be on the same bandwidth as me and you sitting here
yeah,
doing a
yeah,
podcast. They want their own, and these guys deliver that. So
yeah.
interesting company in the communication
Nice.
services if ever you want to dip your toes.
And what was the ticker symbol?
CCOI.
Okay, super. And before we close this topic, then, right? What is your current sector allocation?
So I'm overweight in consumer staples. I think that's
Hmm.
about 30 or 40% the last time I checked. Healthcare and information technology are my top three.
Yeah. So for me, if I look here at how is it position size. I don't look here at dividend income because those numbers slightly differ. But the biggest for me is consumer staples with no information technology with 21%, consumer staples with 20%, and healthcare with 17%, and energy with 15%. And I can actually finish. I've got them real estate trust with 7%, financials with 7%, and you always hear me saying the bankers are wankers. So I don't own banks, but these are all insurance companies in that are also operating in this sector.
T. Rowe
And
Price would be as well, yes.
yeah, yeah, exactly. And then materials is 6.5%, and industrials 4.5%, and consumer discretionary is 0.5%. And this is my Starbucks position effectively.
That's yeah, it's pretty nice allocation. The only difference I have is I have a certain percentage towards high yielding companies, so closed end funds,
Yeah.
which are not typically dividend growers, but they
Hmm.
do offer high yields, 8, 9,
Yeah.
10, 11%. It's difficult in this day and age because we know they do get hit hard. They get hit way harder than your
Yeah.
typical stocks do when you're in a bear market. So they're getting hit, but I mean the dividend is quite juicy from some of them.
Well, you don't need to excuse yourself. This is not dividend growth talk. This is dividend talk.
No, and I make no apologies for that. I mean, I
Yeah.
invest in them for the dividend, and that's not a huge position, but I mean, sometimes 10% dividend yield over the last 10, 15 years, it's hard to pass up something like that.
Yeah, makes sense. And for me also, I mean, we just spoke about communication service. Actually, consumer discretionary is also for me almost an empty bucket because it's so cyclical and there's not a lot in there that I like. I mean, people are probably looking at Disney, but Disney cut its dividend in the pandemic. And I think this was really unique, right? Because it was a company in the blast zone, like airlines. But there is still something to it. There was also the streaming wars going on, right? And so it's now is it around $90, I believe, right? So I honestly believe that Disney is really becoming attractive again here based on forward looks, but it's just not paying dividends, so it doesn't belong in my portfolio at the moment.
If you look up at the sector for Disney, it actually falls under communication services, funnily enough.
Yeah,
Yeah,
I thought it was consumer discretionary.
yeah, I would as well, but you would you'd be surprised. And
Did they
similar.
change it then, or was it always like that?
I'm not sure. I just quickly checked it there, and it's under that sector. I mean, I would have had someone like Pepsi or Coca-Cola in discretionary, but they're actually consumer staples, I believe, as
Yeah,
well.
exactly. Yeah. Because you would always buy this stuff, also in a crisis. But this is really interesting that Disney is, I said, in the communication sector. I didn't expect that, but that's because of it, because it's in the media industry, of course.
Yeah,
Yeah,
but I mean, modern day companies now they're in so many different areas. It's
yeah,
sometimes it's hard to nail them into one.
yeah,
But I suppose it's. I mean, their sector is communication services, and then their industry is entertainment. I mean, they don't fit. That doesn't fit for me.
yeah. It's like hookers in the communications sector because they communicate. Yeah. Anyway, thanks. It was nice to talk about this sector allocation and the sectors in general a little bit, and also to hear your thoughts. But I think we pretty much align about this. So maybe it's a nice time to go to some of the listeners' questions for today, to the next stage of this podcast. And I'm just curious to what your thoughts are. And Rafa, our Spanish friend, asked a question: Siemens under 100 at a 4% yield. Do it or wait?
I mean, as I said, if you look on that board behind me, I have Siemens, and my price target was 100. I have 100 wrote there, and they're now trading at 99.26. And then I've also started to read books where I'm, as I said, I'm trying to find better entry points. And you're looking at trend, and the trend is your friend, and all sorts. And there's no doubt we're in the bear market at the minute, right? There's absolutely no doubt about that. So what do you do? It's quite hard. I think I'm going to start nibbling in at them. I don't know if I'm going to put all my eggs in at the moment, but I might start buying a couple of shares every week because it's just I like them at 110, 120, but
Yeah.
100 is the price that I wanted. I wrote it down, and I need to learn from my mistakes, not get too greedy. So I'm going to start easing into them.
Yeah. Yeah, I've got similar thoughts. I own already a position, so I will be more greedy on Siemens because also T row price around now $115. We were looking at it before the show. Damn, fuck, this also looks attractive, right? And this is the issue here. But I think what you're saying is a good idea. Instead of what I do usually is I buy one or two stocks per month. Maybe I should here just spread it out to 4 or 5 stocks. Look a little bit at the commissions at which broker I buy it, because if I buy at the Hero European stocks, I pay €4.5 commission, and then it becomes, if you do 5 stocks, €20 again. I find that expensive
Yeah.
here. So yeah.
I don't know if you use TradingView, but I mean, I use it and I map out some support and resistant lines and leave some comments there.
No, I have. I mean, for me, technical analysis. I mean, I can take my. I can draw a line on a chart, and I can draw it exactly as how it fits me the best. So that's it. But what I sometimes do also when I make videos, I do that, right? What was the bottom like
Yeah,
then, and often you can see this floor or something like that. So
yeah,
I would lie if I never look at it, but I don't use it for making buying decisions. But what I did do, for instance, the other day, I went to the Irish-born investor and I pinged him about ExxonMobil. I said, I asked him like, where is it going? Because it feels like above $100. Maybe I should finally start selling some of it because long term I'm not a strong believer in ExxonMobil. So I was thinking, okay, maybe I should sell something and reallocate the money elsewhere, maybe in the energy sector or somewhere else. And he said, no, it can go to 120 or 130, but I think it dropped already to 80 in the meantime. So, that's my experience with even giving trend analysis a consideration.
but the point I was going to make is I have a list I haven't
Yeah.
mapped out here, and I don't know when I did this, but I have at 75. I have obviously a resistance level and a comment: back the truck, back the truck up if it reaches this point. So 75 is where I'm aiming. That's my greedy level for Siemens.
Nice. That sounds like a put option.
Yes, it does actually.
Yeah.
Good,
Yeah.
good point.
Hey, the next question I think is from Maarten, but we touched upon it already. So he was asking about your Altria comments. So I believe we have covered that already. But there's one sub question to it, and is: do you hold any other tobacco stocks at the moment than Altria?
Just British American tobacco, just the two of those.
Okay, super. Then the next question is from Renark, and he's asking, what is the best European real estate investment trust in your eyes, and why do you both think it is DFAMA?
We didn't say it was DFAMA.
No, we will just get the CEO 15 July, right? We get the CEO on the
Yes,
Matthias will
yes.
join us on the podcast. So also guys on Facebook, Twitter, if you have already questions for him, reach out to us. It's the first time ever we will have a CEO on the podcast. So we want to really get the CEO perspective as well. Effectively, I want to hear from him. Like, does he think we are just a bunch of idiots as dividend growth investor or not? I really would like to hear his perspective on that. But I don't know if it's the best one. I didn't study Defama well enough. I might change my opinion after his visit. But for me, it's Castellum, honestly.
Yeah, and I knew you were going to say Castellum, and to be honest, I haven't studied DFAMA a whole lot either, but I will be before we have the guest on the
Yeah,
show, because I think he at least deserves that for being kind enough to take
definitely.
time
Yeah.
to talk to us. But um, for you, Castellum, I don't know. I'm not too familiar
Are you
with
a
them.
Vonovia fanboy?
I have Finovia, but I mean, they're not looking too good at the moment, are they?
What are they trading at now? 30 or something like that?
Oh, they dropped it. They dropped hard. I have my pants down.
Oh, 31 euro.
Uh,
Hallelujah.
I have my pants.
5.4% at the moment, dividend yield.
I remember everyone when they dropped the 40, everyone got excited, and now they're woo.
Yeah. I remember that as well. Like 40 euros back up the truck, and it's now 31. This one, I mean, I never stepped into it. I had it on my watch list one time, but I always had this thing like, this, this Germany with their, and then providing low cost housing. But, this is just share price, right? So if you believe in the long term and it looks good, then please don't listen to me. Then this might be really attractive, right? But this is what is withholding me still to not pull the trigger on this business.
I have to be honest, right? Phil, who's a regular guest on the
Yeah.
show, Phil had warned me about this a long time ago. I didn't listen, obviously, and here we are. But I mean, on the face of it, they do look like a well-run company, and they're doing quite
Mm.
well. But
And an
there's
amazing dividend growth track record.
there is some issues in Germany, and particularly around pricing and governments and a lot of regulations.
Mm.
So it's quite difficult for 'em.
Yeah. Okay, and then Divcraft is asking if you have ever considered Japanese dividend companies, and if so, do you have a company in mind?
No, I have never considered them, but someone like Nintendo, or Keyence is another company I would love to
Mhm.
own either of those two companies.
Yeah. I think we should have, and we had someone once that could at least speak a little bit about Asian stocks, but I think we should one time have a dedicated guest that can really enlighten us on Japan and some other stocks in the region. That would be probably really good for us as well, because I think we have a bias there.
Mm.
We often mentioned we also don't have the time for it, right? Because Europe and the US is already more than enough to pick from. But I'm actually curious to hear if there's really like some dividend aristocrats that we should really consider.
Yeah, I mean, there's some decent companies coming out of Japan, really, don't they? And
Mm,
I've named Keyence there,
yeah,
a high quality company. I don't know about much about the business as a stock, but I know it as
yeah,
a company. I deal with them all the time. Their support is amazing. The
yeah,
the products are amazing. So I could ask for no more, and they pay a dividend. So I mean,
yeah. Yeah, and alternatively, you can just buy AFLAG, which get most of the business from Japan. Yeah, so as an insurance stock. So good.
cool.
And they have a duck as a logo. I think that fits in Japan.
Yeah, big time.
Okay, then Dave is asking, what are your thoughts about the big Europe short from Dalio? He's betting against Europe, so we spoke a bit about it. But what are your thoughts about it? I think
Yeah, I
we
mean,
spoke about that last week as well, right?
yeah, we spoke about it last week. He has a short in America as well, which he opened long before Europe. I'm not surprised. Europe is struggling as well. We have the war and we have lots going on. So I'm not overly surprised to see that. Quite happy. There's some companies in there that we spoke about last week that
Yeah,
he has big bets against, which is good news. ASML is one of them. It's a
yeah.
company I would like to own, not at current prices, but
Let
if
him short the hell out of it, right?
exactly, exactly.
Push it down, and put a smile on our face.
Yeah. Okay.
Okay, then there's a question from Ryan, right? And he says, aside from Target, do you have any other consumer staples on your wish list? And I think it's a question to me because I put yesterday a tweet out that I was running Target through the stock screener,
Yeah.
and I had to think about Ian Lopuk's wife, right? Because they have a really nice video about about Target, where the wife is explaining as a consumer what Target effectively is about. She's talking about the loyalty card and such. This is the analysis that we're typically missing in the dividend wit community, our grow investors community, because we look at balance sheets and such, and we hear too little consumer stories. And I can really recommend that video from Ian Lopuk, where the wife is explaining why Target is such a good business. I was really hooked on to her listening, and she explained it so well that I got also hooked on to into the business model of Target. So, but anything else on my watch list? Yeah, I would say Ahold Delhaize. Sorry, I know it gets boring here on Dividend Talk, but it's going towards the low 24. My fair value is around 25. I own already quite some Ahold, like 50 or 60% of my target size. So for me, I'm a bit more greedy. Below 22, I will buy some Ahold again. So yeah, it's on my list, Ryan. Anything for you
Cool.
besides
Uh,
these two?
no, I have a huge sector allocation to consumer staples, so I'm keeping out of it for the
Yeah.
time being.
Hey, then the Jens Minator, he's asking, how will falling house prices impact real estate investment trusts?
I mean, it depends on the investment trust, right? It obviously won't affect every real estate investment trust, but certainly ones that depend an awful lot on residential income. There's some here in Ireland that would be heavily dependent on that. So if prices go up, people can't afford them, and they're missing rent and not paying. Obviously, it's going to have a knock-on effect. But I'm more concerned about rising rates than I am about house prices.
Same here. I think rising rates depends really on the contracts, the deals that they have, whether they can pass it on. Like realty income is quite safe from that, right? But there might be companies that can't pass it on to the renter. So
Yeah, and even if they do, it might incur a lot more rates where they're not being paid, which obviously has a knock-on
exactly.
effect on your dividend
Yeah,
and so on. So
true. Good. These were the questions from today. Thank you, everyone, for raising them. Always really interesting for us. Also, we have a lot of fun answering these. Yeah. So maybe then we didn't do it for some time, but let's do a stock pick. And because I'm so eager to share one, and Ryan just brought it up, I just want to bring Target to your attention. So not too long ago, Target did a profit warning. They said our margins are under pressure. The stock tanked on I think in a single day or something like that. Like was it 20%? I don't remember even. The stock is trading today at a 3.07% yield. It doesn't really often trade around these levels. And it has a payout ratio of 28%. It had higher payout ratios before, but the earnings were outpacing the dividend growth at the time. That's why the payout dropped. The payout will go higher again because next year the profits will be lower. That's what they are warning for, right? But let's say that profits will be slashed in half. Let's have this theory. You're still talking then about a payout ratio of 60%, which is still safe. So in my opinion, it starts to become really attractive target. I only own Ahold as such a supermarket chain, so I could have one in the US as well, although Ahold has already a lot of exposure there. And Target has always intrigued me here. It has a almost 8.5% 5-year annual dividend growth rate. So that is also like um, actually at this year's inflation, but generally above inflation. So for me, it is, I would say, a recommendation for people if they are looking at another consumer staple to start maybe look into it. I would say give it a look and consider if you want to analyze it further. So this is my stock pick for the week to our stock suggestion for the week to look into.
Nice. And there you go. We can pick somebody else other than Ahold Delhaize.
Exactly. It's Target.
Okay, good. I think that's the end of the show. Thanks for the stock pick. I know you asked me beforehand, and I couldn't think of one, so I'm glad you came with something different this time. Again, thanks to all our listeners for sticking around this long. We do have some guests coming up, which is quite exciting. As we said, we have the CEO of the Fama coming on soon, so we have a lot to look forward to over the summer.
Super. Guys, have a great weekend ahead, great week, and see you in the inside and see you next week.